What is up, XRP community? Welcome back to another video. Thank you for joining me. I've never seen crypto Twitter so bullish on the XRP chart. Specifically, something I want to show you is the XRP BTC correlation chart. Brad Garlinghouse recently on Bloomberg television doing an interview, and the biggest vertical for XRP and Ripple that is not cross-border payments. Let's hop right into it. So this came out today. John Deaton, a lawyer who led the class action lawsuit for XRP holders when the SEC sued, is running for Senate against Elizabeth Warren. Elizabeth Warren has been a senator that's been very against crypto, talking about how terrible it is and all the negative things it's used for, never highlighting any of the positives. However, we're starting to see a change in the legislators being pro-crypto versus negative crypto. We're starting to see more people identify the value in crypto. And Ripple is actually backing John Deaton with a $1 million donation. So that is always good to see. The SEC's war against Ethereum and consensus is not over. Okay, contrary to popular belief, a lot of people in crypto think that Ethereum is scotch-free and stuff, except when consensus announced in June that the SEC has decided to conclude its Ethereum 2.0 investigation, it was taken as another signal that a hostile administration was changing its tune. That, I'm afraid, is simply not true. The SEC isn't antagonistic as it's ever been, and it is unlikely to abate until new leadership takes the agency in a new, more productive policy direction. I also want to talk about this new presidential election with Donald Trump versus Kamala Harris and the implications if either of them are elected. He says it's understandable that people are a bit confused. Both policy wonks and the public at large perceive that the SEC might be rethinking its stance when it did an 11th hour about face in late May on the approval of an Ethereum spot ETF. When that decision was made, the days were numbered for the SEC's year-long harassment of the Ethereum protocol. The SEC's lawfare campaign still rests on two propositions: that a lot of tokens, perhaps nearly all, as they are changing their stories, are securities. Then when consumers use certain smart contracts, it turns the developers of those contracts into intermediaries regulated under securities laws. If you just look at the Ethereum ICO, how they pooled together a bunch of money, people were given tokens, and then you compare that to the precedent they took against Ripple in their institutional sales of XRP, it's very clear that Ethereum is in breach of this contract. However, we still have no answer as to why XRP was the culprit and Ethereum isn't, but this is still developing. And now, how this election could shape the future of crypto. Brad Garlinghouse on Bloomberg television just this week.
Well, I can't speak to China specifically, but what we are seeing is whether it's the UK, Japan, Singapore, I mean, even the European Union, more than 24 countries have come together to create a framework to provide crypto regulation. They call it MiCA. And what's frustrating as a U.S. company and someone who grew up here in the Midwest, it's frustrating that we as a country can't get that rules, the framework in place. And instead, we have this interminable litigation coming from the SEC that really isn't solving the problem. Well, we went to court and spent over $150 million in 3 years of our time arguing that in the court and prevailed. We can't do that with every single token. And so we have been advocating, and there is legislative momentum, both on the Democratic and Republican side of the House. Something passed the House just recently called the FIT 21 Act. The Senate is considering various bills. And certainly with the choice of J.D. Vance as a vice presidential candidate, he personally has put forth language, a draft language for a bill that the Senate may or may not consider.
So it's less about the daylight between the regulation of the two parties, and it's more just about Gary Gensler.
Well, certainly Gary Gensler, in my judgment, has been at war with crypto. That is for certain. But it's also, I think, a tone from the overall Biden administration. The OCC certainly has been anti-crypto. You're seeing other elements of the banking industry really take a kind of an anti-crypto point of view, which hasn't, I don't think, served us well. And to Romain's question earlier, I think, we as a country have benefited immensely from being the heart and center of the internet. The internet really grew up here in part because we had clear regulatory dynamics in the United States passed in the late 90s. That allowed entrepreneurs to build, that allowed capital to flow in. And I think we've been, seeking that as other countries around the world have leaned into that and provided that clarity. And, you're seeing entrepreneurs and capital in this industry flow into other countries instead of the United States.
I am curious, though, Brad, too, when we talk about the regulatory aspects of it, and I understand the policy platform that Trump and, to a certain extent, that J.D. Vance has started to articulate since he got named as VP candidate. But we also know that a lot of the objections to, let's just say, the growth of the crypto space was not just coming from the White House directly. There were concerns raised by the Fed. There were concerns raised by the Treasury. Agencies that, to a certain extent, will have a certain degree of autonomy from anything that comes out of the White House, no matter who is sitting there in the Oval Office.
Yeah, I agree wholeheartedly with that. I think that, look, what we are seeing and what we are seeking is clear rules of the road. The vast majority of people I know in the crypto industry are good actors who want to follow the rules. We've been asking for clear rules. And I think, as Alex described earlier, in Chair Gensler, instead of saying, let's codify that, let's sit down, they keep hiring more lawyers to bring more lawsuits. And again, it's just a silly way to approach regulation through enforcement is not the best way to approach this problem.
I just wanted to include that because whenever Brad Garlinghouse does go on mainstream media, I think it's important to cover what exactly he's saying. Now let's talk about the XRP price chart showing strengths against Bitcoin, specifically the XRP BTC chart. Analysis of the XRP BTC trading chart from Binance over 3-day intervals reveals that XRP has recently formed a classic bottoming structure and successfully broken through a major downtrend resistance. This development could signal that XRP is poised for substantial gains, potentially doubling in value against the dollar in the near term. And this is significant because I've seen over the past few years how many people have been negative about XRP in the crypto community. And now we're starting to see a lot of people identify it as a high value proposition play because of this 7-year wedge pattern that's been playing out. And if you look at right here, taking the wedge that we previously had for XRP in 2018, maybe make this a bit bigger, and you're seeing now XRP has had even a longer wedge with a significant breakout here, taking the previous impulse, which is a little bit misguided. The higher the market cap of a cryptocurrency, the more money that needs to pour in for a similar gain. So I don't think you see a 42,000% gain like we did in 2018 when XRP went from a few pennies up to its all-time high of a little bit over $3. However, even if you have half of that gain, not a 40% gain, but a 20,000% gain, you're still seeing double-digit XRP. Now, if it did mimic this gain from before, it's looking at an XRP price in the $150 range. But like I was just saying, I think that's a little bit over too bullish. Let's just get to $1. Let's get to double-digit dollars first, and then we can go forward with that. But more bullish stuff on XRP. The spot trading volume is currently outperforming Bitcoin, Ethereum, and Solana significantly on all major exchanges, including Coinbase, Kraken, and Binance. Big moves are taking place on-chain and behind the scenes, and this could be because big market makers in whales are identifying the upside in XRP. Bitcoin is already back at its all-time highs. Maybe it does go over 100K, maybe it does hit 200K, but when you're looking at multiples and how many X's something can get you in a return, XRP is obviously the better option right now. Now let's talk really quick about tokenization. Here we have a chart saying, predicting the tokenization in the U.S. Treasury market could grow to $3 billion by the end of this year. This follows 200% growth year to date from $590 million at the beginning of the year to $1.7 billion today. It's very clear that tokenizing real-world assets is the future. Here from the Financial Times, they cite a Bank of America report noting that tokenization in just the gold market surpassed a milestone of $1 billion in 2023. This surge in value shows how asset tokenization is spreading through financial global markets. According to Boston Consulting Group, tokenization of real-world assets could become, or is set to become, a $16 trillion industry by 2030. It also unlocks significant liquidity for many of the world's most valuable and illiquid asset classes. That's why Bank of America sees the tokenization of real-world assets, such as commodities, currencies, and equities, as, quote, a key driver of global digital asset adoption. Similarly, BNY Mellon released a report in 2021 that said 72% of global institutional asset managers plan to develop solutions for tokenization. And it's not an if, it's just a when. If you guys don't know what real world asset tokenization is, it's basically tokenizing things like precious metals, things like bonds, stocks, real estate, tokenizing those on the blockchain for a variety of reasons. Just think about the stock market closes before dinner time. It's closed on the weekends. It's closed on holidays. And why would people not want the option to be able to trade their assets at any time instantly on the blockchain? It's one of the biggest use cases for blockchain technology, and all of these big banks, consulting groups, Boston Consulting Group, Bank of America, BNY Mellon, Citigroup, them speaking about tokenization is very clear that it is the future. But it's not just these big banks, it's also these big hedge fund investors, guys like Larry Fink, who recently went on mainstream media this week to talk about the future of tokenization. Take a listen.
How far does it go?
When we bought BGI in 2009, we were ridiculed by most of the financial community saying you cannot marry the culture of an active investor, who we were, and a passive culture. And we said, why? Our clients use both products. Our job is to be agnostic to our clients, to work with our clients, and to provide a whole portfolio solution. But over time, more and more clients started to think about, how do I want to get an exposure? Do I want an exposure in this area or this product? And I could do that through actively investing in ETFs. In 2012, we said, ETFs are going to be the new engine for fixed income. And boy, did that get a lot of ridicule by many people in the business community. And today, the fixed income markets are totally imbued by ETFs. And so at BlackRock, when we bought BGI, we had $290 billion of ETFs. Today we have $3.5 trillion. And then this week alone, just yesterday, we launched the iShares Bitcoin ETF. And so I would say to you, if we could ETF a Bitcoin, imagine what we could do with all financial instruments. And so what we announced in our architectural change, iShares was this business division in itself. And we thought that's too exclusive. We needed to include the ethos, the philosophy, the spirituality of what iShares can provide in everything we do at BlackRock. Because we believe we're just halfway there in the ETF revolution, that everything is going to be ETF'd. And we needed to ensure both active products, passive products, digital products are going to be used through the vehicle of ETFs. At the same time, in this architectural change, we're elevating the whole concept that we are going to be curating more and more of our performance-based products too. So it's a very large architectural change. A lot of people have asked me, iShares is the most successful division within BlackRock. Look what it did. Why are you doing this now? And we believe it's so important to be anticipating the next move. I would also say on the beginnings of a ETF Bitcoin, we believe ETFs are a technology no different than Bitcoin was a technology for asset storage. We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities around bonds and stocks and digital by having a tokenization. But the most importantly thing, we can customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe, if you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own shares.
Is this the end of mutual